Good morning, trading world. It is March 13th, 2024, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook is Tricky Trading in Dangerous Ranges. Critical area in trade in terms of risk reward. For my taste, it is too risky to take straight up long trades at these levels unless it's futures. We are deep into overbought territory for every chart time frame above the hourly. Does this mean we reverse and fade here? No, not necessarily. Being overbought is a condition, not a trigger or trade trigger. Yesterday I was expecting a pullback and short opportunity. We got the pullback right to the reaction area of 51.81. However, it happened before the open. So when the open actually came, we were on our second try to break lower, and we failed to even get back to the low that was made pre-market. Another thing that has worried me, that kind of worries me today, is that order flow is all over the place, which means we could be in for some more roller coaster rides up and down. If you're like me and want to be short, until we get a full rejection of a high on a 4-hour time frame, it's too dangerous to really take straight shorts when it comes to option positions or swing positions. However, I was campaigning to put a short position on between 51.88 and 52.20. I held out until I saw ES hit 52.34, which equaled 5.15 at the time on the SPY. I talk about futures all the time, but if I'm doing an options trade with any kind of time component, usually it's on the SPY. I jumped the gun on this trade. However, the reason I can be comfortable being short here is, one, it's a spread trade. Spread trade just means it's a defined risk trade, which means I'm okay losing what I put up. And this is what I close the video with every day, is that your most important job as a trader is protect the capital that you already have. And you have to assess the risk, and you have to, even when you step out on risk, you risk an amount that you're comfortable with. And this is definitely one of those step out risky moments, because there's no real rejection yet. We could still soar up even higher on the 4-hour time frame. So what I did, I sold a 5.15 call of 26 March 5.15 call and bought a 26 March 5.17 call. Again, it's a defined risk trade. I don't know if we have come down enough to say we fade from here, but I feel comfortable enough to test the water with a few pennies. Could I have waited? Yes, and I probably should have, because order flow even this morning is still all over the place. This morning the puts are starting to outnumber the calls, but the amount of puts that are probably sold versus bought is not enough to determine the direction. If anything, it means more roller coaster up then down again, or vice versa. Let me bring up the intraday levels. All right, here we are back with the key zones for today. On the support side, we have our Jack support zone at 52.30, Queen support zone at 52.19, and King support zone 52.03 all the way down to 51.91. On the resistance side, we have our Jack resistance zone at 52.63, Queen resistance zone 52.73, and King resistance zone up to 52.90. Now, the important battle area or no man's land across today is 52.30 all the way up to 52.63. In this no man's land, the more time we spend below 52.46, the more it speaks to a bearish reversal. The more time we spend above 52.46, the more likely we are to push up into uncharted territory. On the other hand, if we pull back really low, the support battleground is between 51.91 all the way to 51.59. And let me write that down here. 51.59. That's the battleground on the support side. Now, in this battleground, 51.76 is that line of demarcation. The more time we spend above 51.76, the more likely it is to push back up at some point. The more time we spend below 51.76, the more likely it is we push lower. The volatility is still up today, higher than any day left this week. So we could very well give all the gains back from yesterday plus some. I am not sure if this will happen, but because of volatility, I have to prepare for it. So those are the likely levels today. Again, today where we are, it strikes me more so as a range day, so you have to be prepared. On range days, entry signals that I get both short and long are valid. However, I do want to take the time and list some reaction areas. Those reaction areas that I have for today, they're all reactionary long entries. So today we have 52.35. I guess I should write that. Reaction. I'm not going to write the whole thing, but the reaction levels I have today that would trigger entry longs for me, based on everything that I look at. We're looking at 52.35. That's the first one. 52.23. That's the second one, and the third one is 5200. So those are all the levels that I'm looking at today. I'm leaning toward the short side, but we have to see what the advanced decline looks like when we come out today. Because everything over the hourly chart time frame was overbought. But again, that doesn't mean that we have to reverse and fade from here. So, as always, remember your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's make it a great one.